Assalamualaikum to Madam Arfah. I am Nurain from DKB2 from Group 3. Would like to inform Madam that my group consists of 5 members, which is Aisyah Kashati, me Nurain, Shafiqa Fakiha, Shamir and Nur Hazman Haziq. Today, we are going to present prime book entries that include purchases journal, sales journal, written inwards journal, returns outward journals, cash book and general journal. Next, let me introduce my name. My name is Nurain binti Muhammad Sanif with my matrix number 01DKB20F2017. Today, I'm going to present Introduction to Prime Entries, Definition and Function of Purchase Journal, its format, and how to record a purchase journal. First of all, let me explain what is prime book entries. Prime book entries is a book or record where certain types of transactions are recorded before recording in the double entry bookkeeping system or the prime entry. The main books are include purchase journal, sales journal, written inwards, written outwards journal, cash book and general journal. Next, I will continue with my next part, which is purchase journal. Purchase journal can be defined to record all credit transactions on credit purchases for every purchases of goods only. The source document which is used as an evidence of the transactions into purchase journal is purchase invoice. Thus, every purchases must record on debit except when there are drawings, so we must record it as a credit. Move forward, there are three functions of purchase journal. Firstly, analytical function. Each transaction is analyzed into the debit aspect and the credit aspect when the time of recording a transaction in the journal. It helps in understanding how each transaction will affect the business. Secondly, to record functions. It helps to record every transaction with principles. Thirdly, is historical function. It is for the future references to help the business to analyze their past performance and put their future possibility. For purchase journal formats, there are 5 columns as it shows in the picture below. In the first column, start from left to the right, is date, account credited, invoice number, posting reference and amount. The function for each column are date to record the purchase date, account credited to record the name of the business from which company or merchandise was purchased on account, invoice number to record the invoice number from invoice given for reference purposes, posting a reference to record the account number after posting to ledger, and last is amount is to record the amount that shown in invoice. Next, to record a purchase journal, you need to have the source document of purchase journal, which is purchase invoice. In purchase invoice, it have information such as invoice number and date on the left side, and account credited, which is the receiver of the purchase invoice itself, and the total amount of purchase on the right side, which is will be used in transactions of purchase invoice to purchase journal. For example of transaction from purchase invoice to purchase journal, which is it must have both debit and credit. And when the credit purchase happens, purchase account is debited. Meanwhile, the creditor's account, for example, from this question, David Richard is credit with the equal total of amount 3,300. Furthermore, the creditor's account, which is David Richard, also act as a liability. I think that's all from me today, and the next presenter will continue our presentation. Thank you.
Assalamualaikum and a very good day to everyone. My name is Shafiqa Fakiha binti Shahriman with the registration number of 01DKB20F2024. I'm from class DKB2 and today I'll be doing a presentation on sales journal. On today's presentation, I will be explaining about the definition of sales journal, the format and recording on sales journal, the example of sales journal, and lastly is the conclusion on sales journal. Firstly, what is sales journal? The sales journal is used to record all of the company's sales on credit. Most often, these sales are made up of inventory sales or other merchandise sales. Here, the term sales refers to those goods or merchandise in which the business normally deals. A sales journal generally records the revenue generated by the sale of goods or services, and it also records these events, which is the recordation of a sale and also the recordation of a reduction in the inventory that has been sold to the customer. Next, I will explain about the recording of sales journal. Since a sales journal entry consists of selling inventory on credit, form and accounts are affected by the business transaction, which is the accounts receivable and revenue accounts, as well as the inventory and cost of goods sold account. When a piece of merchandise or inventory is sold on credit, two business transactions need to be recorded. First, the accounts receivable account must be increased by the amount of the sale, and the revenue account must increase by the same amount. This entry records the amount of money that customer owes the company as well as the revenue from the sale. Second, the inventory has to be removed from the inventory account and the cost of the inventory needs to be recorded. So a typical sales journal entry debits the account receivable account for the sale price and credits revenue account for the sales price. Cost of goods sold is debited for the price the company paid for the inventory, and the inventory accounts is credited for the same price. As a conclusion, a sales journal is a specialized accounting journal, and it is also a prime entry book used in an accounting system to keep track of the sales of the items that customers have purchased on account. Next is the format of sales journal. The information recorded in sales journal depends on the nature and the needs of each individual businesses. However, a commonly used format of sales journal is firstly the date column, which used to record the date on which the sales is made, and normally it is the same date as written in the invoice. The second one is the account debited, where this column is used to enter the name of the customer whose individual accounts are maintained in accounts receivable subsidiary ledger. The third one is invoice number, where the sales invoice number is written in this column. The fourth one is post reference, where the entries in sales journal are posted on daily basis to relevant accounts in accounts receivable subsidiary ledger. The post reference is used to enter account numbers of individual accounts in the accounts receivable subsidiary ledger in which the entries are posted. The next one is accounts receivable and sales. In this column, the net amount receivable from customer is written. Lastly is cost of goods sold and inventory. In this column, the cost price of the merchandise sold is entered. Next, I will explain about the example of question on sales journal. Little Electronics is a retailer that sells electronics and computer parts. On January 1st, Little Electronics sells a computer monitor to a customer for 1,000. Little Electronics purchased the same monitor from the manufacturer for 750 3 months ago. On the next slide, I will explain about how Little Electronics would record this sales journal entry. Based on the invoice that is provided, the date for the sales journal entry is January 1st under the invoice number of 100. For the particulars, the first one is account receivable that's been debited for 1,000, and the cost of goods sold, which is also been debited for 750. Next is the revenue and inventory that is being credited for 1,000 and 750 respectively. Lastly is the conclusion. An entity should maintain sales journal in the prescribed format by generally accepting accounting principles for an accounting of credit sale transaction so that debtor records and credit sales records can be managed. Its usage is overall beneficial for an entity. And if the company does not maintain a sales journal and forget to pass on any credit sales entry, then it will be a loss for that company.
Good morning and Assalamualaikum. My name is Aisyah Kasyati binti Barul Ulum. My matric number is 01DKB20F2007. From DKB2, we'll continue this presentation by explaining about written inwards journals and written outwards journal. Before I explain further about written inwards and written outwards journal, I would like to share with you guys the source documents that involved in this journal. So there's two types of source documents that involved. The first one is debit note, and also the second one is credit note. So here is the example of debit note that I took from Google. So this is the source document, which is debit note. The second source document is credit note. This is the example of credit note. I also took these pictures from Google. This is the flow of credits and also debit notes. A purchaser will send a debit note to the seller when the goods is returned as they are found unsatisfactory. Next, the seller will send credit note when they are under charges or send additional items to acknowledge the debit note that's sent by the purchaser. This is the format to record written outwards and written inwards journal. There is 5 information that you need to include, which is dates, particulars, credit note number as the reference, the folio, and also the amount. I put the example under here so that you can see how is the written inwards recorded. So what is written invoice journal? Written invoice journal, also known as sales returns, refers to the goods that are returned to the business entity when customers find that the delivered goods is not meet their expectations and therefore unsatisfactory, exist or incorrect goods. The transaction will be recorded in written invoice journals from the copies of credit notes that are sent to the customer who returned the goods or was overcharged. The double entry for written invoice is with debit written invoice account and also credit account receivable if customer bought the goods from us by credit. The function of written invoice journal is when customer made a sales returns, we need to debit the sales account so we can obtain the total amount of sales returns. So the clerical work can be reduced by using a sales return book. Value, quantity, and also the reason of sales returns also are known from these sales return books. Now let's move on to written outwards journal. Written outwards, also known as purchase returns, is passed by the company to record the transaction of merchandise purchased from the supplier when the customer find that the goods that delivered is not meet their expectations and therefore unsatisfactory, exists or incorrect goods. The transaction will be recorded in written outwards journal. The double entry is we will debit account payable if the company bought the goods from the supplier with credit, and we will credit written outwards journal. The function of written outwards is to help the company in recording transactions involving the return of the goods which were purchased by the company with credit or cash from the suppliers, thereby keeping all the track at the same times. And we also can reduce the balance of purchase return from the balance of the inventory to know the exact balance or the status of inventory present in the company. In conclusion, we know that written inwards will reduce the amount of sales, whereas written outwards will reduce the amount of purchase expenses. So in a view of this, returns may be subtracted in the trading section of income statement from their respective sides, whether purchases or sales. That's all from me, and my next team member will continue this presentation.
Hi everyone. I am Nur Haspan Nazib bin Qorisham with my number 01DKB20F2001. So today I will continue with our presentation and I will explain more about cash book. So what is a cash book? Cash book is a financial journal that contains all cash receipt and cash disbursement, including bank deposit and withdrawal. Entry in the cash book are then it will be posted into the general ledger. Next is how does it work? In cash book, all the cash transactions made during an accounting period are being recorded. A cash book usually will be divided into two parts. First, the cash disbursement journal, which record all the cash payment, and second is the cash receipt journal, which record all the cash received into the business. The cash disbursement journal will include items such as cash payment for rent, insurance, or to pay account payable, and the cash receipt journal will include items such as payment made from accounting receivable, commission or cash sales. The main objective of cash book is to handle the cash efficiently and making it simple to access cash balance at any point in time, and allowing manager and corporate accountant to budget their cash properly when needed. Accessing cash information into a cash book is probably faster than accessing a cash book atau a ledger. Cash book format. Cash book will be divided into two parts or column. On the left side, we have debit, and on the right side, we have credit. In the debit, it will have a date of transaction, detail of transaction, volume number, discount allowed, the amount of cash received, and the amount of check received. On the credit side, we have the date of transaction, detail of transaction, volume number, discount received, the amount of cash payment, and the amount of payment made by check. How to recording a transaction into a cash book. To record it, all transactions in the cash book have two sides, which is debit and credit. All cash receipts are recorded on the left-hand side as a debit, and all cash payment recorded by date on the right-hand side as a credit. The difference between the left and right side show the balance of cash on hand, which is showing the net debit balance if a cash flow is positive. How to balancing a cash book? To balancing it at the end of each month or another appreciate period, the amount column of both sides is totaled. The difference between total is written on the lighter side below all other entries. This difference is the closing cash balance for the current period, and it is usually termed as a balance period forward or balance CF. In the next period, it becomes the cash opening cash balance and usually termed as the balance brought forward or balance BF. Lastly, I will explain about source of document and example taxation for cash book. Susanna Enterprise is a company that sells stationery and paper product. The following below is an example of transaction and the document for Susanna Enterprise and way to record it in the cash book. First document is check. On 28 June 2020, Susanna Enterprise made a payment by check to Surya Senia Berhad bin full settlement his account. The way to record it, first we need to insert the date 28 June on that column in the add credit side because we made a payment. Then we insert the detail of transaction with Surya Sendan Berhad and insert the amount of transaction which is RM 20,500 in bank column. Next document also check, but the difference is Susanna received this check. With the transaction on 18 July 2020, Susanna Enterprise received a check from Atira Enterprise as full settlement his debt. The way to record it is same with the document on A, but we just need to record it on the debit side because we receive a payment. Third document is payment voucher. On 31 August 2020, Susanna Enterprise paid a salary to Chailing by cash. To record it, firstly, we need to starting with insert the date on credit because we made a payment. The detail is salary and the amount is RM 1,800 we recorded in cash column. Next is cash bill. We use cash bill to record a cash sales transaction. On 29 June 2020, Susanna Enterprise made a cash sale worth RM 300 to ABC Trading. To record it, we need to insert the date, amount on the debit side, and detail we need to name it as a sale. The fifth document is cash bill that been used to record a buy good by cash. With the transaction on 6 September 2020, Susanna Enterprise bought good worth RM 250 by cash from Surya Sendan Berhad. To record this transaction, it seems just like to record the cash bill on D, but this time we need to record it on the credit side because we made a payment and the detail of transaction we name as a purchases. And the last source of document for cash book is official receipts. With the transaction on 31 October 2020, Susanna Enterprise received rent from Wong worth RM 2,500 by cash. The way to record it, firstly, we need to insert the date on 31 October and the amount on cash column in debit side. And lastly, we record the detail as rent. That's all from me. Thank you.
Thank you to my team members, and hi everyone. My name is Muhammad Syamil bin Muhammad Anifa, and my number metric is 01DKB20F20 and 30. Now I will continue about my part of presentation, which is General Journal. First at all, what is the definition of General Journal? The definition of General Journal is the journal of the company in which initial record keeping all of the transactions is done which are not recorded in any of the specialty journal maintained by the company like purchase journal, sales journal, cash journal, return outward journal, and return inward journals. It is where double entry bookkeeping entries are recorded by debiting one or more accounts and crediting another one or more accounts with the same total amount. The total amount debited and the total amount credited should always be equal, thereby ensuring the accounting equation is maintained. Next, we move on to the next slide, which is all other transactions are not entered in specialty journal account for in a general journal. It can have the following type of transaction, which is the first one is account receivables, second account payables, third equipment, fourth accumulated depreciation, and fourth expenses, and lastly interest income and expenses extra. Next, we move on to the general journal format. General journal format, it provides the chronological order of all non-specialized activities. It consists of 4 or 5 columns. In order to write our transaction, we have to write our general journal format above, which is the first one is date of transactions, second short description, third debit amount, and lastly credit amount. Next is source of document, an example of transaction in general journal. The source of document that in this example that I took is invoice that involves the transaction of buying asset, which is, as you all can see, it is invoice, but the description is they buy furniture and fitting. Furniture and fittings are assets, so it's automatic. We record in general journal. So we record as shown below, which is first one is date, and second is particular, folio, debit, and credit. So that is 20x1 13 January, and the debit is furniture and fittings, and the credit is Amina furniture, and debit are the total amount that we all can see, which is 1,800, and credit 1,800. And don't forget to write our narration for our transaction, which is purchase furniture and fitting from Amina Furniture. The reason why furniture and fittings is in debit is if we buy furniture and fittings, the asset will be more, so automatic asset will increase in debit. So the combination for the furniture and fittings is Amina Furniture. The next source of document that involved in general journal is memo. As you all can see the memo above, it is about that the Ahmad Fuad is took 5 units of fuel saving oil while brand worth 200 for my personal use. So this kind of memo that is for personal use will be recorded in the general journal. So as you all can see, don't forget our format, which is date, particulars, folio, debit, and credit. And our date is 20x1 and 23 January, and the particulars are debit are drawings, and the credit are purchases, and debit 200 and credit 200. And don't forget to write our narration for our transaction, which is took 5 units of fuel saving oil YY for personal use. In this slide, I will explain about how to record our journal entry. First, according to the rules of debit and credit, when an asset increases, its account is debited, and when an asset decreases, its account is credited. In this transaction, machinery and asset is increasing, and the cash and asset is decreasing. So the journal entry will be made as follows. As you all can see, first we have to write our format, which is date, account titles and explanation, and debit and credit. First, we have to write our date, and second, the ledger accounts involved, which is from the statement above, which is the statement that include the involved in this transaction is machinery and cash. And third one is narration to describe transaction, which is to describe what is the purpose of the transaction is involved. And lastly, amount of transaction, which is 15,000, debit and credit. Debit and credit must be equal amount. All business transactions are recorded in the general journal in a manner illustrated above. After making journal entries in the journal, they are periodically posted to the ledger accounts. Next, we move on to the flow process. Let us look at the flow process of entries before and after it is recorded in the general journal. Before entry is made, the maker has to decide. First one is the account which will be affected by the transaction, and second one is which account to be debit and which account to credit. I give you an example. The example is the owner buy office equipment by cash. So the owner have to decide what account that affected by the transaction. Based on the statement that I give, the account that is affected by this transaction is office equipment and cash. So the owner have to decide which account to debit and which account to credit. So this is the flow that maker has to decide. After making entries in general journal in accounting, all the transactions are summarized and posted in ledger. Now let's look the example that how to record in general journal. The Moon service engaged in the following transaction during the month of November 2015. So before we record our transaction, we have to write our format first, which is date, account title, and explanation, debit and credit. Okay, the first transaction is paid office rent for the month of the November 500. So now first, we have to write date, which is November 3rd, and we have to identify which account that involved in this transaction. So based on the transaction, the accounts that involved in this transaction is office rent expenses and cash. So the debit and credit amount, and don't to forget to write the generation, which is paid office rent for the month of November. So same as the rest, which is purchase office supplies RM 250,000. So maker has to decide which account will be involved, which is office supplies and cash, and debit credit, and the date, which is November 6th. And don't forget to narration, which is purchase office supplies for cash. And the same as the two above, which is purchase office equipment on the account 4,500, which is the account involved is office equipment and account payable, and 405,000 debit and credit, and the narration is purchase office equipment on account. And lastly, November 21st, bill client 24,000 on account. So the account that involved in this transaction is account receivable and service revenue. The debit credit amount is 24,000, and the narration is bill clients on account, and the date is November 21. So this is the format that we have to follow in order to record in general journal. The first one is date, account title, and explanation, debit and credit. And in order to record this transaction, the owner have to identify which account has to be debit and which account has to be credit, and which account is involved. This is the basic of the owner have to know in order to record in general journal. So lastly, the conclusion that we can conclude general journal is an initial record keeping that records all the transactions except for the ones which are recorded in a specialty journal like cash journal, purchase journal, and etc. It states the date of transaction, description, credit, and debit information in the double bookkeeping system. These journal entries are then used to form a general ledger, and the information is transferred into respective accounts of the general ledger. The ledgers are then used to make trial balance and finally the financial statement. That's all from our group. Thank you so much.